As regarding the euro crosses, of course, the number one to discuss is euro ruble. The ruble is under having selling pressure at the moment because of expanding sanction list imposing by United States authorities against some of Russian oligarchs. Also, we should understand the very tough situation around Syria, a possible military strike of NATO, of United States military militants against Syria, and the possible involvement of Russian militants in this kind of conflict should, of course, have a kind of tendency of overall risk aversion situation in the financial markets. In this case, of course, such kind of currencies like Swiss franc and Japanese yen should remain very well supported. As regards the ruble, as we told a lot of times in the past, a break above the upper side of longer term range of 72 should produce a kind of acceleration to the upside which we've seen during a lot of days. During yesterday and during the day of today, the pair finally broke higher, and as you can see, even the level of 78.75 was tested this morning. So all in all, the next barrier for the Russian ruble against the euro is the psychological barrier of 80. Here is this kind of the barrier of resistance. The 80 is also kind of a psychological resistance for the currency at the moment. And also we should pay attention on the highs of April of 2016 around 79.16, where is also another kind of resistance. Anyway, we suggest that any kind of move in the cross above 80 should attract the action from the side of Ministry of Finance of Russian Federation as well as the central bank. With kind of interventions in the currency market. Already this morning, as you can see, the pair after reaching the highs of 78.74 finally moved back, and now at the moment is trading around 76.90. The volatility is really very high at the moment, right, like usual in case of such kind of risk aversion fears. As you can see, the asset market of Russian Federation is under heavy selling pressure. I mean, the shares of major Russian companies are under the downside pressure at the moment. Of course, that's all in all, that does not bode well for the Russian currency itself. So we suggest that sooner or later, probably during the course of the week, we will retest the psychologically important level of 80. But let's concentrate on the economic side of the event, of the situation, as we should understand that the kind of sanctions, the new sanction list imposing by the United States against Russian oligarchs, it's a kind of maybe not so important, but it should not have such kind of large effect on the financial market of Russian Federation. Probably here the market is more feared of the situation in Syria than the situation regarding the sanctions and regarding the situation around the oligarchs and the companies like N Plus or Rusal or Renova by Vekselberg. All in all, we suggest that in case of a new kind of sanctions, extending of sanctions, the Russian rich people should understand that sooner or later you will be in this kind of list, and maybe it's the time to take your assets back from abroad inside of the domestic country. And in this case, we should have a we should have a strong demand for Russian ruble. Anyway, at the moment the situation is a little bit different, and this kind of situation could last a little bit longer before we actually see a kind of a rising demand for Russian ruble because of taking back of the assets from abroad back to the home country. As regards the other currencies, euro, Swiss franc is the moment still very well supported, while above longer term uptrend line located at 115.85 at the moment. While we are above this line, the pair should sooner or later retest the psychologically important barrier defended by Swiss National Bank in 2013-2014, as you remember, and probably it's just a matter of time when we will test at this level. But again, of course, the situation will develop around regarding the geopolitical situation in Syria. In case of rising conflict in that region, of course, the Swiss haven currencies like Japanese yen and Swiss franc should remain in the strong demand. As regarding the euro sterling, the situation here is more or less the same. We are closer and closer to retest the lower side of the currently established range. But to say the truth, the pair should remain a sell on any kind of rally closer to the longer term downtrend line located today at 89.05. Let's see that on the daily chart. And finally, the euro yen. The euro yen we already sold at 31.80, and while we are below 133, we suggest that sooner or later the euro yen should be back to its underlying bearish trend. At the moment, that's all. Some later we will come with our analysis regarding the commodity block of currencies.